very much for joining this webinar. We are talking today about 3 practical techniques to monitor ESG on private companies. So we're going to talk a lot about private equity, private debt, but also high yield, even suppliers and clients monitoring on the corporate side. And of course, we're going to talk about ESG and sustainability, including a bit about positive impact with qualitative and quantitative approaches. So this webinar is 45 minutes and we'll have 15 minutes allotted for Q&A. And without further ado, I'll let you introduce yourself, Navin, and I'll do the same afterwards.
Thank you so much. And thank you to SESAMm Super Return for putting this together as well. And good morning, good afternoon, good evening, wherever you are in the world. And I hope you look forward to the next 1 hour of, may I say, excitement with ESG. So call me Navin, call me Nav, whatever you are comfortable with. I basically sit as a partner running our sustainability practice in Tata, in very specifically in Tata's technology practice. And what we see and what we cover is a number of clients across financial services, across corporates, and we also advise our Tata group of companies as well. So we are a huge industrial conglomerate in high carbon, low carbon, renewable energy, good ESG practices as well. Oil, gas, hotels, retail, car manufacturing, you name it. A day will not go by when you do not touch a Tata product as well. Just to add, I've been at Tata Consultancy Services for the past 3 years now. Prior to that, I worked a number of leadership roles in places such as EY, Credit Suisse, RBS, Commerzbank across risk and trading. So I look forward to speaking with you all. And thank you so much for having me today, Sylvain.
Thank you very much, Navin, and we really appreciate you joining the webinar. A few words on my side too. I'm Sylvain, I'm CEO of SESAMm. I'm based in Paris, France, and I'm managing a team of around 100 people at SESAMm that basically extract billions of documents from the web, articles, messages, news, social media, and leverages AI to identify ESG controversies, monitor positive impact on companies, and specifically, and that's really the goal of this webinar, on assets that no one else can cover. So private equity, private debt, supplier, clients, a lot of assets that traditional ESG rating agencies would have difficulties covering. So at SESAMm, we serve a lot of private equity firms, asset managers, corporates, such as the Carlyle Group or Natixis, for example, on the investment management side, or Raiffeisen on the corporate side, helping them monitor ESG topics on clients across Eastern Europe. And we're really interested in private equity, but also private debt, and how intricate the complexity can be in terms of ESG monitoring in that sector. So that's it about me, and I think we are ready to start. So the first thing that we wanted to discuss is the high-level topic of industry challenges with regards to ESG monitoring, especially on private assets and sustainability in general. So Navin, very happy to have your opinion and your thoughts on this.
Thank you so much. So I think when we think about this high level, let's take a step back from what do we mean by sustainability, right? Someone in the organization can tout the word sustainability, but what specifically are they asking about in sustainability? Is it ESG? Is it climate change, climate risks? Are we talking about carbon markets? Are we talking around sustainable financing? Are we talking around net zero? Are we talking about concepts such as circular economy, the EU Green Deal as well? So when we talk sustainability and we try to think about what does sustainability mean, one of the challenges that you see is that you need to join all of that wording up together. And that's why it becomes crucially important, especially in an industry such as private equity, where data is not widely open or not widely shared, because when we look at companies, well, rival companies on listed stock exchanges as well, just the sheer amount of data disclosures that need to be done for ESG, climate risks, amount of sustainable financing the firm has done, their usage of carbon markets, and not last but not least, how are they going to get to net zero, is very, is extremely widely available. Now, take a step back again. How do you take those words and those keywords, and what are we trying to measure? What is relevant to the PE company in scope? What is going to be most important for their strategy as well?
That makes sense. And you're right, actually, Navin, is one of the primary, like the biggest problem is simply that private companies don't disclose as much information, and that there is a lack of data globally in the industry. And to find that this is a problem because people have to put costly processes in place to collect the data, or because it poses a problem from a standardization perspective.
Of course, and I think how do you standardize, right? Do you, for example, if we go into the crux of it, do we go and proxy? Let's say we've got a PE oil and gas company. Do we just go and proxy to BP because that oil and gas PE company is based in the UK and has a similar decarbonization pathway, or is managing its climate risks in a similar way to BP, for example? Or do we have to proxy that company because their investment is not primarily in the UK, but maybe in emerging markets? And we might have to find a proxy such as maybe Reliance Oil and Gas, which is an Indian oil and gas company. Or do we basically proxy against a Shell, for example? And proxying can be great, and it's been used by quants for a very, very long time. But if we don't really understand how the listed company is going, is it going to make sense for the PE company that you're trying to proxy to?
Yeah, you're right. And we're actually seeing that a lot in ESG rating agencies that have that kind of human costs that limits the scale that they can have in terms of rating new companies, including small caps in private markets, and where that kind of proxy rating is used more and more. But it still means that you're lacking data on the companies themselves. Everything is more industry-based, which also creates some issues sometimes. Well,
and another thing... Yeah, sorry, go on. Keep going, Sylvain.
No, and I don't know what's your opinion on that, but one of the two key things that we observe from an industry perspective and issues that PE firms are facing is, one, regulatory pressure is coming. It's been in asset management for quite some time, but the SEC right now is scrutinizing private equity from a tax perspective in particular. And by doing this, it also puts the focus on ESG regulations and how SFTR, the EU taxonomy, etc., could apply to private equity. And I think there's also pressure from the LPs. So kind of the first question, what is your ESG strategy? That's something that we see a lot with GPs that we work with. Is that something that you see also in the industry?
Very much so, Sylvain. And I think the issue is the strategy keeps on changing. And with economic headwinds we are facing globally, with higher rates, higher inflation, the terrible war initiated by Russia on Ukraine as well, very volatile commodity prices that we are seeing as well. Sometimes ESG is taking a back step, sometimes ESG is taking a front step. Now, how do we navigate those global headwinds and factor that into ESG strategy? And one of the points that sometimes tend to get missed is that, some governments are putting environment on the back foot. And good examples are the new UK government that we currently have in the UK, which is talking a lot about deregulation. Some governments, such as the EU and their taxonomy, are upping the standards and trying to push those standards. So what does that mean again for your ESG strategy? And does that mean that country by country, I need to have an individual sovereign ESG view so I can understand the impact on the, if I'm a PE company and I'm invested in certain sectors as well, what does it mean? And that is the issue, is that you cannot have a generic ESG strategy and apply that globally.
You're very right. So yeah, regulatory pressures, specificities across the different countries. I think we're touching on a lot of high-level topics on the industry issues. One of the things that we see a lot more as a data provider and AI solution is that there is really a data issue beyond the regulatory pressure, beyond the need. Once that need is expressed, there is actually a huge issue in the whole industry, is the lack of coverage. So there are like more than 20 million firms worldwide that private equity could access as financial assets. And there are less than 50,000 that are actually rated by rating agency. And so I think the entire industry is really seeing that data gap that is costing in terms of a standardization in the whole industry. Because if the data is not there, it's very difficult to get together and find about a standard process. And what that means is that there is a lot of reliance on manual processes, questionnaires, which sometimes also lack objectivity. So we're seeing right now that, contrary to asset management, most of the information is disclosed on an active basis, instead of firms being observed by external parties. And I think that could create some issues in the industry, and especially with greenwashing involved, etc. This could actually create a few issues for investors in the next few years.
And I think one of the examples to take there is, how do you say to, let's say, an asset manager or a bunch of investors who are, say, investing in PE companies or creating PE funds or funds of funds, and they are being asked, can you tell me what the climate risks are for those companies? Can you tell me the underlying sector that that company sits in? What is their strategy for biodiversity, for example? What is their strategy to social and governance metrics as well? Really, really super challenging questions, especially because the PE company has to disclose currently, right? Now, that's where, it goes back to a word, how can you use proxying, but how can you get other types of data that are mandated by sovereign legislation as well? Because remember, let's go back to the example of oil and gas, for example. So if we talk about oil and gas, there are certain regulations around oil and gas where disclosure has to happen, whether you are listed or whether you are unlisted as well. And that can go right down to carbon emissions. So the hunt for the data needs to take place, but mapping of the sector and the sovereign legislation in the country, which will determine how do I get those data points, are very, very critical. So as they say, data is gold.
Yeah, it is. And what we found also is that even when you have the data, the journey is not over. So a lot of the issues is in a lot of private equity firms, there's going to be a lot of data collection through questionnaires, but then that data is not going to be regularly updated. So it's going to be stale pretty quickly. And after a year, the process will start over. It's tough to have that point in time history. So public markets are very aware of this because every event could have a high intensity impact very rapidly. But this is actually the case also for private equity. So stale data, lack of frequent data is a bit problematic. And similar to equity markets, public markets, I think black box scores are also a bit of an issue, a bit less so, because a lot of the processes rely on manual data collection. But at the end of the day, you still end up in a lot of cases with a sort of score that may not be entirely transparent, neither for portfolio companies nor for LPs. And sometimes they don't really understand the ranks and the scores. So I think transparency is a bit of an issue also that people are trying to solve in the industry progressively.
And I think that's where we are seeing these issues of greenwashing and social washing going out there in the industry. And in some cases it's deliberate, in some cases it's not deliberate, right? You know, there are certain companies which have just had, unfortunately, very, very poor data points, or not understood the data and relied on the validity and if I can pronounce that word, let's say the validity of the data correctly. And they've taken that to their board and they've used that in pricing or to raise financing as well, and then basically found out that the media or research companies have then gone and challenged the assumptions that have been used in the data as well. And would you say that it's the industry's problem or challenge? You could maybe say yes and maybe no. But at the same time, remember, we've got a plethora of ESG standards out there. So for PE, who are they going to choose, right? Where will they lean towards? So the UN SDGs is a framework that's used very often in asset management. But there have also been certain criticisms about the methodologies that are used for UN SDGs as well. But then you could maybe go to the other side of the equation and look at what are the metrics being used by SASB, which is already folded into the ISSB now as well, starting from next year. And SASB is an investor's point of view on ESG metrics. Or you could go to the holy grail, may I say, and not to be blasphemous, but the holy grail of ESG frameworks and metrics such as the GRI initiative. And the GRI, which was one of the first frameworks to basically release a framework to measure E and S and G issues, right? So I think it goes back to, well, which framework do I use and which will be accepted and which will I not be put on the hook for?
Yeah, you're right. And there's UN Global Compact, UN SDGs, and the EU taxonomy and emerging frameworks. To be honest, in a lot of cases, when the data is available, we find that investors are kind of happy to adapt. If it's SASB, it's SASB. If it's UN Global Compact, it's UN Global Compact. But the biggest issue that we see usually day to day is actually the coverage. So if you have to choose the framework, it's likely because the data is not there and it's not standardized. And we found that this puts kind of mounting pressure both on ESG teams, deal teams, even corporates, because they have to make all of the choices, they have to actively collect the data, and they don't have that kind of passive approach that ESG rating agencies are providing to public markets, where they can just say, okay, I'm going to go to a big provider, buy that data off the shelf, and I'm just going to use that framework, that exact taxonomy, and that specific focus. And to the extent that some of our clients in private equity, ESG teams have even to be the ones doing due diligence from an ESG perspective on any new deal coming through the pipeline. So that burden can be pretty high. Actually, it can be a very difficult task. And I see a lot of ESG teams that are significantly understaffed actually in private equity, and where it's a bit difficult to really handle all of these tasks without the passive data approach. All right, so let's move to the core of our presentation and discussion for today. So as you understand, our perspective on the market is that with a lot of these difficulties to track private assets and the lack of that standardized data, AI and natural language processing, so algorithms to extract information from text, are one of the only solutions that can provide that level of standardized off-the-shelf data and that can help complement questionnaires and other active approaches. So the goal for today is to start diving into specificities, a high-level overview of NLP technologies leveraged for that context. And also, Navin, would love to have your view on how do you see NLP leverage in general in finance and private equity for these types of use cases?
So NLP, very, very important and a very powerful technology competency that can be used, especially when we're thinking about where is data sitting, right? So when we think about, and let's go back to what I was saying when we opened the webinar, sustainability and what type of sustainability data. A lot of the data could be at a geospatial level. Some of the data could be location-based. Some of the data could be unstructured and structured, right? So let's say you wanted to basically pick up the flood risk data for where the PE has taken a position in, let's say, a social housing project, right? Now, can I use NLP to basically go and read certain documents which describe climate conditions? Or can I use NLP, including AI and ML, to go and read, let's say, climate models? How do I look at, for example, let's go back to oil and gas, right? Because everybody likes to hammer the oil and gas industry, right? How would you go and use technology to go and identify what's the methane plume or the methane leakage rate or the CO2 leakage rate, for a very specific location? And again, that data might be sitting in certain documents, regulatory documents, for example, where maybe the EPC in the US has replied back, or the environmental agency in the UK has replied back. So again, understanding, and this goes back to, understanding the sector, where the data is sitting, and how can I go and then use NLP on those, sector regulators and sector regulations?
Yeah, that makes sense. And by the way, you're right to point out that there are things beyond NLP. Geospatial data is also something that is really interesting in that space. Our focus is really NLP, basically extracting insights from text. That's basically that branch of AI. And usually we see that the main use cases are identifying context related to ESG and sustainable development goals. For example, at SESAMm, we track 90 different risk categories off the shelf, and the algorithm are detecting, like a human being, okay, this is actually related to biodiversity. This specific article is mentioning a lawsuit, and this one is about a strike. We're discussing train strikes right before during the preparation. So all of these E, S, and G contexts. And without going too deep into the technology, a lot of this is transformers, language models, deep learning, for those of you that are more on the tech savvy side. And the technology has really drastically evolved in the past 3 years. So it's getting really, really good. The advantage of NLP is that it's pretty universal. So any assets and company is going to be mentioned on the web. It's going to have a website. There are some very rare cases where that's not the case. I can think of one oil company in Texas in which one of our clients was doing a due diligence that didn't have a website at all, but that's really rare. NLP in general is very universal. And whether it's in finding information in news contents, including local contents, so when you can parse local languages in Poland or Ukraine, like we're doing right now for some of our clients, and analyzing potentially controversial context. Social media is also interesting. A lot of the big controversies, like, for example, fiscal, tax evasion, Panama Papers, Pandora Papers, whistleblower alerts, all of this is actually revealed on Reddit in many cases. So lots of relevant information there. And then you have NGO websites, sustainability reports. So yeah, whether you want to identify information coming from NGOs like PETA, for example, or you want to find out about the latest news controversy, NLP is really powerful to help you do that at scale on a large number of different sectors and companies. I think that's one of the very powerful aspects of the technology.
And I think just to add as well, Sylvain, is what is the perception of a PE investing in a company or holding a certain proportion of a company, and the branding, and that's where we're seeing more investment into sentimental scoring. So how would you do NLP, take those outputs and create a sentimental score? So then how can you basically see what is the perception of the public or the perception of the media in terms of what is society saying? And then how would you then go and benchmark that to, does this conform to my ESG strategy, for example, especially the S and the G, which tend to get overlooked because we all seem very hung up about the E, which is also important as well. But let's not forget the correlation between E and S and G.
Yeah, you're very right. And actually, it's interesting to mention sentiment, because in the algorithm that I used, sentiment analysis is very common. And for me, from an NLP perspective, ESG is a bit of an extension of adverse media monitoring. So you're trying to identify a specific risk that an algorithm is going to classify as, okay, highly negative sentiment on an article. And then you're going to associate a context extraction algorithm around specific ESG and SDG context that you then need to map to specific regulatory frameworks. So there is an additional layer, but in a lot of cases, it starts either from reputational insight sentiment or information extraction. I'm looking for a specific number inside a report, carbon emissions specifically, or something similar. So yeah, from technology-wise, it's really an extension of sentiment analysis. And a lot of companies come from that sector initially, and so does SESAMm. We started with reputational insight, and a few years ago, starting to really build that ESG expertise along with a partner ESG rating agency in France.
And I'm pretty sure, let's take a case study such as Tesla. Tesla thrown out of the MSCI ESG index and replaced with who? Exxon. Mr. Musk, aka Iron Man, was not happy. But what did Mr. Musk not think about, right? The S and the G in the overall ESG context, but also what is the sentimental scoring analysis, right? Especially that, he's decided to buy Twitter now, but he likes to blast off on Twitter as well, right? So maybe not very great for the sentimental scoring side. No, just a sense of humor there, to keep everybody awake.
You're right, and not to advertise or anything, but actually SESAMm published on this, so you'll find that there is a study on Tesla on our blog, because we were interested in understanding whether, from a reputational basis, that could be justified, and from a web perspective and media perspective, the level of scandals that Tesla is generating on the social and governance side is pretty intense, actually. And even when you look at things like how viral is the information and how relevant it is to traditional ESG metrics, it's not always looking good for them. So,
of course.
And
I think this is... Yeah, no, sorry, I was just going to say, I think this is where NLP plays its part, right? Because by understanding where you are now, you want to look at your future. You want to be thinking about how am I going to do a regression or an extrapolation out to look at where are carbon emissions going to be for my company, or what amount of capex do I need to put in to basically either address or make better my ESG metric that I'm trying to measure as well. Because at the end of the day, if corporations do that, then financial services will say, well, I'd like to take a slightly bigger position, or I'd like to invest in this PE company because they're doing the right thing. That will make my metrics look good. and also I will minimize my reputational risk, because the last thing a financial services firm wants is to be investing in a PE company that's invested in, let's say, unethical companies with very bad ESG scores and very bad ESG data. And I think that's where SESAMm comes in, Sylvain.
Yeah, exactly. And sometimes these controversies are tough to track. Like we have cases where even the portfolio companies themselves are not aware that one of their subsidiaries is involved in a huge scandal in a specific Asian country for which they actually don't control the information. And that's actually a good segue into kind of the practical use cases. The main ones that we encounter for NLP ESG indicators right now are monitoring of private equity companies, private debt suppliers, clients, and due diligence. And due diligence is actually also important because in a lot of cases, someone at the private equity firm has to check a box saying this company is not exposed to adverse ESG controversies. And checking that box is not a neutral thing. And there's a lot of responsibility. It's going to be either an ESG team doing that and being flooded with a lot of work, or it's going to be the deal team who sometimes doesn't have basically the knowledge of the regulatory framework or ESG, or sometimes it's a bit more systematic. And so we also work a lot with data team or data science team that are looking to embed more systematic data sets. So I think we can discuss these a bit more and in the context of specific examples. So on monitoring and due diligence. And yeah, happy to have your view on this, Navin, and see what you've seen on use cases such as supply chain due diligence, ESG and credit alerts, or ESG controversy monitoring, for example.
Definitely. I mean, look, with a number of our clients that we work with on ESG, a lot of the focus has been on, is this company going to be credit worthy in 5 years' time, in 3 years' time? Because when we look at climate risks, it's been proven that there is correlation between your credit rating and how you manage your climate risks. It's very also clear that how does consumer sentiment and consumer perception impact revenues of a product bought if you have poor S and G and poor E scores as well. And companies that we work with on the financial side and the corporate side are investing a lot of money in trying to understand, if I don't do X, Y, Z, what does that mean for the valuation of my assets on the balance sheet in 5 years' time, 10 years' time, 50 years' time, and the savvy ones out to 50 years as well. Because we've got to remember climate change is a long-term subject that needs to be addressed, and climate change is becoming more frequent and more severe as well. And we can see that, with numerous weather-related disasters that are reported around in the world. But how about supply chain? And a great example is, especially when we came to sort of the end of the COVID pandemic last year, and how materials weren't readily available as well. Again, the types of data insights in terms of building dashboards to help our clients understand, where in the supply chain do I have issues, and where do I start flagging those issues, and how is it going to hold up production of my component, my product, as well. And at the, last but not least, again, controversy, right? We've worked with a number of companies which have had certain issues that have come out in the press as well. Sometimes these companies has happened because of bad data or mismanagement of data. And we help our clients try to understand, okay, look, if you're going to be invested in XYZ company, you really need to understand what does this mean from your S and your G, you need to put enhanced diligence on the S and the G. So, for example, if you're producing electric batteries and you're supplying electric batteries to a bunch of companies, well, what about child labor? What about human rights? What about how people are being looked after in terms of social element? And again, a lot of this is done by, how do you do that? NLP. You need to basically be reading and understanding what is being reported out there via so many different sources of information. So not just the media and doing sentimental scoring, but also how do you do NLP on, like, let's say, a human rights report or a UN report that is issued out. So technology is very key and critical to help us do that. But how do you standardize is the point, right? And how do you compare? And that's probably the number one challenge at the moment.
You're very right. And I think what you were saying about analyzing controversies, for example, on child labor, and like there's really a data aspect to that, is how do I do that in the local language? That's actually a big issue. Even for people doing it manually, it's actually an issue. You have to have international teams, etc. At SESAMm, we cover around 20 different languages. And one of the use cases I wanted to mention today on supply chain division, SDGs, etc., is, for example, we worked with a large private equity firm in Japan on helping them evaluate the sustainability of a green tech investment that they were going into. And so they wanted to make sure that the company was actually really well perceived from an UN SDG perspective in Japanese media and in Japanese consumer discussions. And in addition to that, they wanted internationally in almost every country worldwide to make sure that there was an appetite for, in that case, sustainable material that the company was producing, which would have taken multiple surveys and pretty difficult work to actually do this. And so that's a typical use case, is early stage due diligence, assessing the impact thesis around a specific company, and having to do that on an international basis is super difficult. And NLP is a good enabler for that specific topic that's applicable to impact fund, but also in the context of risk identification. And
no, I think also, sorry, can I just add something there? You know, like how you're talking about the Japanese firm, right? This could be any emerging market company, or let's say a non-English based country, right? You know, where English is not the primary language, but you might be a Western company, but you need to really understand, you know, what actually is going on. So what is the media writing about, you know, right down to, you know, that local language? It might be a dialect of the country's sovereign language as well. And that's just the sheer amount of detail you need to get to go and work backwards to understand your E and S and G. Sorry, Sylvain, I thought I would add that in there.
Yeah, that's a good point. And actually it relates also, I found, on the credit side. So in a lot of cases, what our clients want to do on the ESG side on credit, like you said, is assess how basically assess the relevance of ESG in terms of potential default. That's the key focus of a lot of private credit investors. And it's expressed most of the time in terms of early warning. So that means that your goal is not just to have the information that everyone else has, but really to dive into these local sources, social sources, etc., to make sure that you can detect potential credit risks in advance. And a good use case that we had a few years ago was on WeWork, for example. So yeah, you all know WeWork, global company, etc. But what's interesting is that at SESAMm, we're able, inside local sources and in more social information and local forums, to identify that there was a pretty significant default risk on WeWork at the top of that controversy right before Fitch announced it. And then Fitch issued a report and said, there is actual default risk on WeWork. You guys should be careful. And the credit rating of the firm was significantly downgraded. So early warning is pretty critical in credit. And what's interesting is that's not just private debt. It also applies to high yield. We see a lot of asset management firms that are looking also to get access to these types of early warnings from local data.
And I can't fault WeWork because I do enjoy their free beers that they provide as well. I mean, maybe that could be part of an early warning system. The amount of beer being drunk, and leading to a default.
I will not comment on that.
But look, you make a very good point, and on a serious note, Sylvain, it is very, very key that we get on top of this correlation between how ESG performance is, what metrics should be tracked, and what's the correlation to credit ratings, right? And I think the biggest issue at the moment is that we have slightly different methodologies from different ratings providers on looking at, let's say, an ESG rating. That how do we basically close the disparity so then we can understand the correlation of, let's say, an early warning system that basically triggers you, that says, okay, ESG metric deterioration, what does that mean for credit risk, right? And also, let's not forget tail risks. So when we look at our 99th percentile, how do we capture those black swan events? And can black swan events arise from ESG as well, right? And there have been certain examples in the past where the environment aspect of managing or mismanagement of climate risks has not been done correctly, and companies have actually ended up, CDS prices spiking, default eventually happens, company goes into bankruptcy, especially in the US as well. So again, how do you use the power of technology to start flagging and start bringing that up, right? And I think this is how the role of a risk manager as well is going to change, Sylvain. The role of a trader or the role of an investor, the role of an asset manager who is investing in, let's say, PE is going to change. What are the metrics or early warning metrics that they need to be monitoring? What type of reporting does a risk department need to do as well?
You're right, and actually, if we were just talking about trading, some of our clients are doing CDS forecasts, basically based on that data. In the P space, what it looks like, and we promise practical use case also, and in the private equity space, in private credit, what we see is, for example, we have a large client in the US that is tracking a private credit portfolio of around 5,000 assets. And so they are not attempting to predict CDS spread, etc. What they are doing is they are receiving daily alerts for both ESG and SDGs on the entire 5,000 assets. And private debt typically has a lot more assets than private equity, so it's particularly tough on the team to really track these day to day. And so that helps them centralize monitoring. They receive all of the alerts, they have access to a dashboard, etc. That makes this process really independent from deal teams. So they don't have to take that information from each deal teams individually. And they receive email deliveries, file integrated into their own tools. And so with that, they are kind of safe in knowing that all of the information from all of the sources are already there. They don't need to wait on anyone. They don't need to ask the company to report on these topics. From a reputational ESG perspective, they are well covered and they will not miss any ESG controversies. So that's one of the really practical use cases on private credit.
And I think it goes to show that I think when we look back at the past 45 minutes, what I've been talking about, right, that in private equity, ESG risks, climate risks, sustainability-related risks are now truly correlated and truly part of financial risks now as well. I think we had this historic perception that we would see carbon emissions as non-financial risk. Okay, we could say it as non-financial data. Maybe it's more scientific data. But we're now really bringing in that data and looking at what is the impact to financial risk and financial metrics, something that that wasn't done extensively 10 years ago as well. So very, very exciting times.
It is, you're right. And that's very much on point with topics such as double materiality. How is ESG actually impacting financials? One last use case I wanted to mention, we promised 3, so we're going to honor that promise, is actually controversies and ratings, something that is done a lot in the financial market space and in public equities. There's one example that we recently had in France a few months ago. There's a nursing home company called Orpea that has been exposed to massive controversies, in particular coming from local journals, mistreatments of patients, which is really problematic on the social side. And what's interesting is that rating agencies, public rating agencies at the time, were really seen allocating the best ratings to the company because it has some social impact factors, etc. And they were missing on that local news information and everything happening. And NLP is very powerful in helping make these ratings a bit less dependent on the company's report information, identifying the local information. And for us, Orpea was one of the companies where we identified a lot of critical controversy risk and where the rating from an NLP perspective was really poor, simply because we had a bit more information. And in some cases, it's a way to complement the data that exists. So a lot of our clients are doing this, is leveraging these scores and leveraging the controversy alerts in order to do monitoring, like we discussed, in order to do due diligence. We have a large private equity firm that does that on around 200 companies. And all of that data then gets integrated in internal system, CRMs like Deep Cloud, etc. And then people can then rank companies, which is something that people do in public markets every day. So as to say, okay, I'm going to invest in the best ranked companies, or I'm going to exclude the worst ranks. And this is, I think, something that is going to continue to emerge in private equities, not just events, controversy, but also ratings, actual scores that are useful to have a statistical view on a portfolio.
I think, Sylvain, it's very sad to hear a company executing those type of actions. And I think this is where it shows technology can basically save lives and prevent further controversies. Now, I think taking a step back, how would you take an assessment framework or the health and social assessment framework from the French authorities, and how would you map that into an ESG framework, right? Because, as I said, when we opened 45 minutes ago, each sector has a different ESG problem. Each sector is measured in a different way. So how do you go and take those regulations or sovereign regulations, sector, subsector, and then how do you do that sub-mapping to what the issues are from an E and an S and a G perspective? And I think that's where the government as well need to be clear about what are the E and S and G factors that are important to them. That will give a lot of clarity to the financial sector and especially, private equity firms.
Thanks. I think that's actually a good conclusion. And it's also important to know that not everything is easy in that sector. So we understand here that there is definitely a data issue. There is definitely a lot of problems still to solve, especially in the private equity space, around which framework do we use for that specific type of application. I hope that we provided some answers and, as promised, 3 concrete use cases, which you can take back to your team and which you can discuss as practical applications. So I think we're going to close this session here and go to Q&A and take some questions from the audience and see what people are asking about. So let's move to the Q&A part. Great. Okay, so maybe as a first question for you, Navin, how is it everything here related to SFDR and other regulations, in particular in Europe? And how have tools evolved with new practices, standards, and market expectations? I think that's something that you touched on with the different regulatory frameworks.
Yeah, why don't I take that one? So look, SFDR, it's driving the baseline for the asset management industry, right? The SFDR is also telling you your classification of, is your fund green or is it not green? Is it ESG compliant, or if it's not compliant, right? But the issue with SFDR is that it's connected to the taxonomy, right? And that's the EU taxonomy. And the taxonomy is obviously like a political football, given the current energy crisis that we are going through as well. And how would that be relevant to, say, private equity or, companies? Now, we've got to basically be very clear, where does funding come from? A lot of funding into these PE companies comes through certain areas from the asset management industry. So when you have such a substantial baseline regulation, such as the SFDR, such as the EU taxonomy, which is actually being used as a baseline standard around the world and being globally accepted, right? It is going to find its way in to basically do assessment on PE companies. Very, very, very simple. Hope that answers the question now.
I think it does. Right, so we have a couple others. Finding data on small firms can be challenging. Where is the coverage of private companies for these types of solutions? I think I'll take that one. This one is a key data question. So there are millions of companies to track, and NLP is a good enabler for this. At SESAMm, we track around 5 million companies. So it covers almost every company worldwide beyond growth. So it's very applicable to private equity firms. And that coverage is pretty high compared to traditional solutions in the market that are going to cover around 50,000 firms or so. So this is where we see a big, big edge for NLP. It's covering everything that no one else can cover, because the companies are too small, because they are too local, because they don't disclose information. So I think that's actually one of the key topics, and good question.
I think we have another question as well. Number 3.
And
what is the main benefit of using AI in ESG? Can it also be applied to local websites? Well, why don't I start and hand over to yourself, Sylvain? Well, ESG continues to expand. There are thousands and thousands of metrics out there, right? Are you going to go and basically put a human being to basically look at every single metric in the E and the S and the G area? Very challenging. And how are you going to find the data? I think AI is, including ML, including NLP, is the way forward, and something that we substantially use with our clients. Sylvain?
I think you summarized it well. So coverage is a key topic, and local information is very critical in there. Actually, I think there's one for you, Navin. How much of an effect will ESG have on valuations, and how can a company attribute a quantifiable value to this?
Hugely. When we look at millennials and how they want to invest as well, they are taking more and more environmentally conscious decision. And if they feel that they do not like a company, they can get together and they can actually cause a company, just by public perception, to be impacted. the other thing, away from the millennial issue, which is not hugely, but it's important. We have to remember millennial mindset is changing on which goods they purchase and how they invest. But also the valuation of companies is very much driven by intangibility. When we look at accountants and they're looking at balance sheet, when we looked at, and let's take listed companies, 20 years ago, 20% of a balance sheet used to be intangible. Now 80% of a balance sheet is intangible. And where does intangibility come from? A lot of tangibility is measured by ESG as well. Carbon emissions, social and governance issues, child labor, mental health, employment rights, gender equality. These are all being looked at using techniques such as AI, ML, NLP on the impact of a company to its balance sheet. And as accountants, and especially the ISSB, get better at quantifying what that intangibility is, it's going to be even more and vitally important to the valuation of a company, which will then be taken as a proxy for private equity companies.
Yeah, you're very right. And this really resonates with what we mentioned before, like double materiality. ESG events now just don't have an impact on the environment or on the different stakeholders. They actually have a financial impact. And it resonates also. We work with an ESG rating and credit agency in France called AT Finance, which helped us put together some of the frameworks that we use for monitoring of assets from an ESG perspective. And that's really their motto, double materiality, taking into account the financial side of ESG. And a lot of people have realized that in public markets, equities have been heavily impacted by ESG controversies, and the impact is growing bigger and bigger for every new event. So I think that's also a good thing or interesting thing to take from this, is that ESG is having a real impact on a company's financial, and this is a growing trend over time.
And I think just to wrap it up there, if we want to prove it, look at Deliveroo, which listed on markets. Look at Boohoo, which listed on the markets. And last but not least, Mr. Musk and Tesla. Some very fascinating movements on valuation of companies because of ESG.
Thank you. That makes total sense. Thank you very much, Navin. Thank you, everyone, for listening in and for joining this webinar. We were super happy to tell you a bit more about these three use cases in ESG and natural language processing, and happy to have a follow-up conversation. Please feel free to reach out to Navin and to myself, and have a great day. Thank you very much.
Thank you so much, everybody. Have a great day.